Holland Wilcox acknowledges the traditional custodians of the lands on which this podcast is recorded. We pay our respects to their elders, past and present, and to all First Nations people joining us today.
Thank you for joining us. My name is Alison Choi Flanagan and I am the co-head of Holland Wilcox Health and Care Group. In this episode of our Health and Aged Care podcast, we're going to be discussing insurance and risk factors facing aged care. Today, I'm delighted to be joined by Lyle Stephenson, and she is the Manager Industry Strategy and Innovation of Lockton Insurance Brokers. We welcome you to join us in this conversation, Lyle. It's great to discuss with you these issues.
Thanks very much, Alison. I'm quite excited about talking about insurance, so I think that's kind of funny, right? Me and you both like insurance and legal related to aged care, so hopefully we get to keep it a little bit exciting for people.
Absolutely. So we see from the exposure draft of the new aged care bill, that they're going to be implementing a new model for regulating aged care. And this includes new statutory duties and potential compensation. And those statutory duties apply to both registered providers and also on responsible persons, and that includes the board personally. So what should boards keep in mind now that those proposed amendments are coming through?
So probably the key thing is to focus on two key questions. How much cover is in place under your directors and officers liability policy, and how much is covered or excluded relating to statutory liability cover, and what special exclusions related to fines and penalties that a specialist statutory liability policy will cover. So I'll just go back to why this all matters to boards especially. Penalties and fines for breaching a number of laws are severe, as we know, and it's important that you've got policies and procedures in place that, you know, the provider, contractors, volunteers, employees comply with. So if you have an oversight by an employee or contractor that results in serious near miss or death, and it results in an investigation or inquiry and potentially legal action by a regulator, you can face enormous consequences. And that's kind of going to get worse with the changes to the legislation. But those responsibilities have been in place now for quite some time. So from an insurance perspective, a director's governance risk is mainly addressed by a directors and officers D&O policy, and it's designed to protect the personal assets of directors and officers of a private or public provider for claims committed by those officers in their capacity as governors of the organization. So some management liability and D&O insurance policies will cover legal costs and fines due to breaches or penalties. And that first question I asked about is, what extent of your policy, what do you have covered? Do you understand what you're actually covered for? Providers can buy statutory liability insurance. So you can do that either as part of a management liability policy or on a standalone basis next to your D&O insurance. And statutory liability cover is basically specialist cover for fines and penalties for those legal expenses if you were to breach an act of legislation. So they won't provide cover for things like taxes or workers' compensation premium or breaches of WHS law, and largely because insurers are basically not allowed to do that. But the key thing is really to understand that you have got cover for fines and penalties, and you have got cover for responding to those fines and penalties or those breaches. So I guess that's probably the key thing, is to ask your broker if you have got, how much cover have you got for D&O? What cover have you got for fines and penalties? What is excluded? And how are insurers amending their cover to accommodate any upcoming changes that have been made to legislation?
So you raise a really interesting question. For those people that don't necessarily know, you mentioned D&O cover, which is directors and officers cover, and then you mentioned statutory liability policies. some of our approved provider clients probably think D&O cover everything. So what does D&O actually cover?
So the key thing that directors and officers liability covers is it covers both the individual directors and the organization via generally a deed of indemnity back to those directors for anything that they do to mismanage the governance of the organization. The breadth of that cover will change depending on which insurer you are talking to. And if you do a standalone D&O policy, that's basically all it will cover. And you basically have three sections. You've got a section just for individual directors, a section for corporate governance liability, and where you're a public organization, there's a section C, which is basically cover for things like class actions by your shareholders. That normally doesn't apply for aged care providers because the majority of them are not ASX listed. So the extent of that cover will be, it'll say things like it will include or exclude advancement of defense costs or legal expenses. It will include or exclude pollution liability or environmental liability, for example. And in the majority of cases for a standalone D&O policy, you won't have fines and penalties cover unless it's actually specified or you buy a separate policy. I guess for management liability policy, it's a bit of a hybrid policy. So it's got sections in a management liability policy, and this is the majority of the aged care providers that we have will have this policy. It normally applies for businesses that have revenue up to about 100 million. So that is the majority of aged care providers. It'll still have those sections of individual D&O cover. It'll have cover for responding where the company can reimburse individual directors. It will also have sections for things like employment practices liability. You can buy statutory liability. You can also buy, things like if you fail in setting up your cyber cover properly. And in some instances, you'll be able to get access for where you failed to put in place safeguarding processes around molestation. So that's the policy probably that we mostly see. Does that explain the question, Alison?
I think so. So D&O doesn't necessarily automatically cover statutory liability where you're investigated, but then you can look at a management liability policy that's potentially a bit broader, but ultimately you really do need to get advice from your insurance broker as to what's covered and what's not covered, because I think some of our clients really have a misunderstanding as to what their insurance actually covers. So I think the best thing is to get advice from people like you.
Yeah, look, the majority of the programs that I've reviewed of late, there is both a underinsurance of the limit of the D&O cover and the cover for statutory liability is either missing or vastly underinsured. So that is concerning, especially because if we get some of these amendments that are coming through the bill get put in place for fines and penalties, then that is a big missing.
Yeah, and there is, like some of the penalties that are going to come into place in relation to the new bill are quite high. So, and also specifically for personal liability for responsible persons, the penalties can include, strict liability offence, death or serious injury. This is for a responsible person, for example, such as a director. The penalties can be, 156,500 or 500 penalty units at the moment, or even more. So where there is death or serious injury, it can be quite a lot of money plus potentially 5 years imprisonment or both. So you don't want to go through that where there's no insurance coverage at all.
Yeah, I think there's another. I know we've talked about this at length, Alison, and it's come up at pretty much every conference and every discussion. Just the difficulty of actually getting the right board mix and getting, appropriate talent onto your board. And if you can't demonstrate that you've got proper insurance in place, you are not going to attract the kind of directors that you want on your board, because they will not want to come and play when there's such significant penalty for them from a personal perspective, as well as not understanding that they've got the correct cover in place. The kind of conversations that I've heard of late from, various aged care boards is seeking to go and find directors that work, say, in healthcare or in other sectors where there's a bit more, board maturity, and potentially even those that are listed. And those board members or directors, especially, non-executive directors, will be very, very aware of what they need for that D&O policy and statutory liability policy, etc., to cover them for before they will come and play. One of the other things that has been a little bit interesting for me, and I'm not sure if this is across the board, but a number of the not-for-profit organizations that we work with, this is even more problematic for them because, they're looking for people that kind of work with their purpose or their particular mission or faith-based statement, and they don't also understand the connection between providing a deed of indemnity on behalf of the organization to those individual directors. And that actually is a big trigger for allowing for that D&O policy to work properly. It also sets in place what are the requirements for the directors on that particular board as to their responsibilities around conflict of interest, etc. So I think that's one of the, the key things is it's both about what you're asking people to do, but also what are you willing to provide indemnity for them via the insurance policy, and making sure that the insurance policy actually provides the cover it needs to.
Yeah, I agree completely. What we've been doing most recently for a lot of our clients is looking at their constitutions and drafting deeds of indemnity for directors and senior officers and managers. And those deeds of indemnity not only provide the indemnity, but the drafts that we prepare is also the ability to access documentation, which is needed if they're defending a claim. So it's usually a deed of indemnity and access for that very reason.
Yeah, it's also, I don't know if you cast your mind back to when the Royal Commission began, Christmas 2019, I think it was, when we were dealing with bushfires and, COVID hadn't yet started. And there was this huge panic to be able to get all of the information, across all of these claims the last 5 years. And it caused a lot of upset and a lot of grief. And I think a lot of providers still are having to deal with digitization of their data. And that creates an exposure for governance, particularly when some of these claims might come out much later, and you'll be under new legislation when you're being held to account. Not the old legislation or the old ways, because standards have changed and legislation has changed. So that understanding of what you're actually entering into and what your agreement is, and drafting deeds of indemnity is as important as actually making sure that, you're dealing with the future issues. It's about how you're protected in being able to do the best work you can on behalf of boards.
Also, under the exposure draft of the New Age Bill, there's responsibilities of responsible persons, and they have a duty to undertake due diligence, and that includes taking reasonable steps to acquire and maintain knowledge of requirements applying to registered providers under the Act, to gain an understanding of the nature of the funded aged care services, to ensure that the registered provider has available for use and uses appropriate resources and processes, to ensure that the registered provider has appropriate processes for receiving and considering information, and to ensure that the registered provider has and implements processes for complying with the duty or requirement of the registered provider under the Act. I mean, I think that there should be also a duty to ensure that the organisation is appropriately managed for risk and also insurance. So what should some of the approved provider boards be doing now in terms of risk management, preparing for the changes, including insurance risks?
I'm probably going to answer that in two parts, because I just want to bring up, something else that has come up as a consideration, which is a little bit left field out of the changes around the definition of responsible persons, and then, how to include is the conversation around managing risk, because I agree entirely, Alison. I think the days of, just going out and insuring your risk away and getting your broker to kind of just go do what they do and presenting you with a bill should no longer be the way that you move forward as an organization. One of the things that has been interesting is the new aged care bill proposes to include registered nurses within the definition of responsible persons. So if you didn't know that, you think, oh, well, that's, just part of the changes. But the problem with that is that registered nurses predominantly have been covered under professional indemnity or medical malpractice policy in the past. So when you make someone like that, who is essentially a specialist employee, a responsible person, then they potentially now have responsibilities as a director and officer of the organization. And potentially also then that might impact their liability under the public liability policy. If that actually then happens, the entire system around how the D&O policy, the medical malpractice policy in particular, will need to change. Because if you think now, registered nurses in the majority, we're trying to get as many as we can. We've increased care minutes. We're looking for people to have 24/7 nurses on site. And the risk of them making a mistake and then being held to account as if they were a director or officer of the company means that there might be potential risk of there being a governance mistake. So if that whole process is not mapped correctly around who's supposed to have the cover for the registered nurses, because mostly nurses, if they're employed, they're covered by the provider. If they're a contracted nurse, then they would be covered by the labour hire company's professional indemnity insurance. You need to be looking at things like what contracts you have in place. Do they understand their responsibilities? Does your D&O policy respond properly to include them as responsible persons? It is a fairly lengthy conversation to be having, and it's not something you can be doing, right before your insurance renewal. You should be having that conversation with your risk people and with your insurance broker sooner rather than later. The conversation around how you induct people, how you bring them on, how you make sure they notify, that duty you read out, Alison, is so broad that even things like what cyber system, security system you put in place, you could be held to account for that. So even your cyber protection policy, personally identifiable information is the most sought after data in the world. And in aged care, we've got it all. We've got people's personal information, their health information, their personal identification information. It is the perfect information to be able to steal someone's identity. And given the uplift of cyber and digitization that we still need in the aged care sector, failure to actually implement a proper cyber risk management system is going to be another way that you will get, held to account. So in terms of those, I guess, broader responsibilities for the board and what your original question about risk management and working together with your specialists is to start thinking about risk as something that is identifying what the hurdles are for you to get to your objective, and how do you actually take those hurdles out of the way or make them easier to jump. And I think that takes, being honest about what you don't know, having a really strong agenda for your board meetings and strong reporting process so you can actually go through where are we at in terms of how we're setting up systems in our business so we know where the holes are going to be.
And I agree that a lot of our clients at the moment are undertaking risk reviews and doing risk reports, management reports at the moment. And what we are doing is trying to help them focus on the material risks first. And that can include, for example, Clinical risks, so a number of our clients at the moment are doing internal audits. We know that the Aged Care Quality and Safety Commission are currently, when they're doing their reviews of facilities, they're actually reviewing them against the future aged care quality and safety standards rather than the current, even though they shouldn't be. But I think a lot of our clients are being proactive and looking at what risks that are involved. And part of that is really looking at their insurance policies and how they're covered, ensuring they've got the appropriate skills mix on the board, doing internal audits, including for clinical risks. And you're right when you said that under the new aged care bill, the exposure draft, the definition of responsible persons is being broadened to include any person who has responsibility for overall management of the nursing services delivered by the registered provider, or overall management of the nursing services delivered in a approved residential care home of the registered provider, and who is a registered nurse. So those registered nurses that are managing the residential aged care home will be included as a responsible person under the new legislation, which is much broader than it was previously in terms of who was a director and officer. So I think I agree with you completely that approved providers really do need to talk to their insurance brokers as to how those particular people would be insured going forward. Are some of the insurers looking at the legislation and trying to make decisions about how they're going to manage their policies for the sector? Do you know?
Yeah, so we've been in discussion with a number. So I think really what's happened in Australia is that we've got now a bank of specialist aged care provider insurers. And so Lockton actually speak to those on a regular basis, particularly around, what's coming in terms of changes for legislation and how to ensure that those policies are broad enough to accommodate those changes. So again, a two-part answer, forgive me, I'm full of words today. The first part is things like the advisory bodies that technically was not insured under previous management liability and D&O liability policies. They should be included as a advisory committee or officers of the provider where providers are using those. We have negotiated with the key underwriters to ensure that that definition of insured includes that. But there might still be policies out there that, are not with those key providers that we use that do not have that extension. So I would say firstly that would be, is to make sure that the definition of insured under the D&O policy is broad enough to accommodate recent legislation changes. For the exposure draft changes, we're keeping insurers informed, but they're kind of holding fire until we see what the actual changes are. It's a little bit too early for them to work out, well, what is that going to mean in terms of potential claims or potential reductions in risk that might be a function of the legislation change. And normally what we've seen is that when the legislation actually changes, then, we sit down and nut out, well, what are the key things that we need to actually then work through with those insurers? And then we negotiate for the policies to be modified appropriately. As you can understand, that's a fairly extensive process of education for them as well. But, we have regular meetings with our key partners to go through, well, here's where we're at now. Here's the claims we're seeing. This is what we're working with our providers on in terms of things like, when they get a CERS 1 priority 1 notification, you will as well, et cetera, et cetera. So at this stage, they're waiting with bated breath to see what is actually going to go through. And then we're going to need to do a bit of an exercise around how will the various policies interact with each other to accommodate the changes. It is, again, an extensive collaboration exercise. They really rely on their key broker partners to know both the risks of the individual clients, the individual providers, but also at an industry level so that they can also, provide the correct cover. It's the insurers that have decided to stay in the space are staying for the long haul.
That's good to know. Under previous amendments to the Aged Care Act, approved providers have to establish a quality care advisory body and also, if required, a consumer advisory body. So has the insurers been automatically including them in the policies?
Not automatically. It's been a case of us asking our insureds, do you have both those bodies? Who are they? How are they connected? Because it's not always the case that the consumer advisory body is necessarily deemed to be a director or officer of the organisation. But we want to understand the structure of particularly the advisory bodies, because it's to me anyway, if I look from a very simplistic point of view, it's a body that is actually providing input to how the organisation is governed. And that's similar to, say, an audit and risk committee. But no, it's not automatic. The insurer is not going to give you an automatic extension to cover unless it's been negotiated at a broader level with the broker, or it's been raised at that level. So it is something you need to actually be proactive around, both as the broker and the organisation, as to, how are you putting in place the governance of your organisation?
The way that we've been drafting them in the constitutions is that they're merely advisory, so that they don't actually make decisions. The recommendations are made to the board and the board makes the decisions. So that's sort of trying to protect the liability of those volunteers on those committees, which seems to be consistent with what you're saying. But I think, approved providers really should check with their insurers as to how those advisory bodies are insured as they are appropriately insured. So in summary, good governance is good for business.
Absolutely. And viability of your organisation.
Absolutely. So thank you so much for your thoughts, Lyle. It was lovely chatting with you again. Thanks everyone for listening today. As always, please get in touch with us if you've got any questions. You can find our details on the Holland Wilcox or Lockton websites, or connect with us on LinkedIn. If you've enjoyed today's episode, then rate, review, or follow our podcast wherever you get your podcasts. Thank you.
This podcast is not legal or financial advice and should not be relied upon as such. You should always obtain legal or financial advice about your specific circumstances.